Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And I chose Pro Medicus as the stock of the day, PME. Well, yesterday we learned it renewed an 8-year contract with US-based Mercy Health with a minimum value of $98 million, better terms, and for longer. The string of recent contract wins has prompted Goldman Sachs, for one, to reiterate its buy rating on the stock, noting a competitive advantage around the company's Visage imaging technology, also saying that PME's share of the US market remains low at 7%, highlighting the opportunity ahead. And so it has retained its buy rating on the stock and its price target of $193 per. I spoke with the CEO yesterday. Let's have a little listen about his optimism around AI and margins. Oh, apologies. I thought we had a bit of a grab from our CEO there. Well, you can find it online at ausbiz.com.au. All right, let's get to your views on Pro Medicus. Going to that conversation about parts of the market looking expensive. I mean, that's really one of the only ways that you can fault Pro Medicus, correct?
Yes, well, the quote you used, you can also apply that to WiseTech. And they are not by coincidence two of the basic outperforming stocks in the market. Up to the sense that one fund manager on my X feed this morning tweeted that all he had to do over the past 2 years or so was to own WiseTech and Pro Medicus and just go on holiday, and you would outperform the market.
I think he's done that.
Yeah, but there you go. I mean, I think the key here is to understand that in both cases their products make their clients run their business better and more efficiently with benefits. It's almost a relationship with benefits there. And I mean, in a black and white world, we have value investors and growth investors. Well, value investors will never own any of these stocks, and that's fine. And they will tell us constantly that those stocks are overvalued. If you're a growth investor, you have a different view. You clearly understand that the market is forward-looking, and as long as the positive news flow continues, there's no reason for those share prices to retreat very strongly. Do they look expensive? In both cases, yes, they do. Does it mean there's no more upside? No, it doesn't mean that at all. And you see that from Goldman Sachs' price target. If you take a positive view, and we also have to realize those price targets, which the other side will confirm, they're usually set for 6 to 12 months in the future. So it doesn't mean that if you reach the price target that
everything's done.
Everything's done.
Yeah.
With growth companies, that's not how it works. Right? So what's the best strategy? In my view, the best strategy is if you really want to get on board of these companies, you don't chase them when they are rallying, because that's more of a trader's thing, but you keep your eyes open, you keep them on your radar, and there will always something somewhere at some point. Bond yields, economic data, market rotation, whatever. There will always be a reason at some point why those share prices retreat. And in that case, you snap them up and add them to your portfolio. Clearly, out of risk management, you don't make them too much of a weight in your portfolio, because stocks, like in both cases, they can be quite volatile at times. And the other thing, of course, is, and I'm a big fan of owning stocks for a very long time, if you own the right stocks. If you own them, ignore everything we're about to say here and just keep them in your portfolio.
Yeah. So you wouldn't be buying today. You would be waiting for some sort of a day that we have some selling and you buy it on a pullback.
If you like, I own WiseTech, but I don't own Pro Medicus at the moment. If you go back on the chart, you'll see that a few months ago there was this dip in the share price. Mm-hmm. I waited personally a little bit too long. I was ready to buy, and it psychologically just ran away from me. But I know other people who bought, and they are today, every day, very happy with a big smile on their face. And in the past, I've done the similar things with WiseTech. I added more when those dips appear, mm-hmm. and that's basically the best strategy, in my view, because you also want to manage volatility a little bit and risk.
So that is a solid hold from you today. Philip, so You do the whole price target, buy, hold, sell thing on a daily basis.
Come
How
on,
would
Philip, call it a
how
sell.
would you
Come
rate
on,
Pro
call it a
Medicus?
sell.
I do finger in the air stuff. I really want to call it a sell. I can't. It reminds me of Commonwealth Banks. So, and hats off to Goldman's, I think, to pretty much the only buy in the stock with a apparently $200 price target. From what I could tell from FactSet, the other brokers have price targets ranging from 130 to 155. And even if it's down a little bit today, but even 175, that's an outright sell if you look purely at valuation. Yesterday's announcement was significant. Long-term contract renewing, long-term client renewing and spending more. I think the initial contract was 21 mil over 7 years, now 98 mil over 8 years. So clearly doing very well, companies.
And they've got more renewals to come. You know, could this be a blueprint for what's to come?
So this reminds me of CBA. I mean, WiseTech's probably another good example. CBA, analysts will call it expensive based on valuations as far as they can see, and then you get an announcement like yesterday, which is probably better than what most people expected. So. Can't believe I'm going to say this. Put the valuation aside. It is expensive. It is not a buy. There's probably catalyst rich more. There's renewals coming, which means the share price will keep getting shunted upwards. It's not likely to go down anytime soon. I can't bring myself to call it a buy, so I'll call it a hold. Bottom draw stock, close your eyes. Forget about 10 brokers calling you, telling you to sell it. It's like CBA at $50 or CSL at $50. Bottom draw, it'll be higher in 10 years.
I think we should not underestimate if the market starts anticipating that all those renewals coming up that they are of similar magnitude, that share price will be a lot higher.
Catalyst rich, but neither will call it a buy today. They're value conscious to a certain degree. So that's our stock of the day, Pro Medicus.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.